Hello and welcome to another update video on PENGU. The Pudgy Penguins chart is currently still in a correction here, but we have really only just now reached, here on Friday, we've only reached the support zone between 3 cents and 3.3 cents. This is like a micro support zone in the broader support zone. This is generally wave 4 support, this area, but doesn't mean we have to max it out, right? The idea is that the market is potentially in an upside impulse. So far, this correction has unfolded in 3 waves, as we would normally expect it from a, you could say, from a corrective pullback, in 3 waves. And while the correction could extend a little bit, it already does look a bit complete. I mean, if this is indeed a 4th wave, then what we normally want is that it, unfolds in a corrective pullback and that we reach the area normally around the 38.2 retracement. That's 2.9 cents. We don't have to reach it. It's important that we get 3 waves down in an ABC structure or maybe even a triangle, but it is not a triangle, so it does look indeed like an ABC pullback. And the support zone there is just basically the overall, these are the parameters, right? So as long as we're holding 2.5 cents, we can watch for higher. Now, there is also a micro target zone, and that is the area between 3 cents and 3.3 cents. When we're considering a correction like that, what we can do is we can take the length of the A wave, basically like the first leg of the correction, then we get a B wave bounce and then a C wave down in 5 waves. And based on the A wave, we can calculate the length of the C wave, and we landed in the support zone. So we'll see if the market does react here to this zone and starts a 5th wave to the upside. Based on what we see here on this chart, the 5th wave itself should be a 5-wave move. So it should unfold itself as 1, 2, 3, 4, 5, either as an impulse or a diagonal pattern, and that 5th wave should get to minimally 5.3 cents, I'd say. There are a couple of levels that overlap there. 2 important Fibonacci levels. Could be that this is enough, but because the 3rd wave got to the 138% extension, even a little higher, we would like the 5th wave to go also maybe 2 fib levels higher, round about the 178.6 extension, in this case, the 6.2 cent level. 7.4 cents would be a bit of a stretch, I would have to say. That would be a bit of a stretch. I've also added here a resistance line, you could say a trend line to the chart, a descending trend line, which has been tested already a couple of times here. I've got 3 touch points. These trend lines, they are not, or especially in the current cycle, they haven't really been the most reliable ones to watch, but obviously still they act as a trend filter, so there seems to be a local pullback, like a local downtrend, overlapping structures, a break above it, especially if it's like a 45-degree angle, which is what we see right now. A break above it could indicate that the wave 5 has started. So just waiting here for the bulls to show a reaction. I will have to reinterpret the chart below 2.5 cents. It would indicate that a more substantial top has potentially already formed. But as long as we're holding above support, and as long as the pullbacks remain 3-wave movements, I'm going to watch for higher prices and give the bulls here the benefit of the doubt. So nothing unusual at the moment. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. I also invite you to join us on X for additional updates. Here you get additional updates, video updates, sometimes coins that we don't even cover on YouTube. Like, for example, today I posted the SPX 6900 chart. I know, very popular. And also just, join the community there. And quick reminder, today we've got our member live stream at 5 p.m. UTC. If you want to join that, and if we see each other there, great. If not, then I wish you already a great evening, great remaining Sunday, and a great start to the week. Thanks so much. Bye-bye.